Welcome, and here we're looking at the US dollar, and what we've been looking for, we had been looking for a five-wave structure up here. This fifth wave here was extended 1, 2, 3, 4, 5, and we're looking for some type of correction through here. It may be completed because we've got a three-wave structure here, but to confirm that, we want to see support on the 81.30, the top of subgroup 1. So looking at that on the intraday here, we've got this three-wave correction, so we know that it's corrective, so that's a good start. Secondly, we need to see either an impulse wave up through here, and it is developing in that, very small here, but 1, 2, and probably 1, 2, 3, 4, 5. Here's a third, so a little correction here, the fourth, a fifth wave up through here. I'll just draw this out now that I'm here. So little fifth wave here. An A and a B and a C here, then support here, and then a move up through here. So looking for something like that here, and that would be the key to be shorting the euro as well. But with the euro, moving on to that, we need to see, to confirm it, we need a breach of the 135. We need to see a move through here to confirm that we are working in a wave 3 to the downside. If not, as I mentioned yesterday, then we need to look at this as an A wave here, a B wave here, and a C wave back up to here for the wave 2 in brackets over here, and then the third wave down. So it's just need a bit of time to do that. The particular pattern through here also appears to be corrective, but I can't confirm that until this low here gets taken out. So we'll just drill in and have a look for that. So in this move coming down through here, as it stands at the moment, it's actually in three waves. So that can be a B wave down here, alternative B wave, so an A and a B and a C here, and then we get the C wave up here. But a move below this little guy here, then that would cancel out this being a C wave up here, and then we can look for this move down here. Even though it's not going to give us any sort of trade thing, because it will come down here somewhere, and then we'd be looking for an A and a B and a C back up through here, and then this would be the short trade here. And it may, depending how far this goes down here, it may just come back up and retest the 135 and fail there. But just remember that this is the block of supply in through here, and that would obviously be the resistance as well. So as I just mentioned, that little bar there on the intraday 1 hour chart here, it's really this one here. So we need this to be taken out through here. So far we can continue to call this an A and a B over to here and a C up to here. That fits, but we need to see it over. We need to see it an overlap structure to confirm the bearishness of it all. So that's that really, and that's that point here. And what we're looking for here would be five waves down, the 1, the 2, 3, the 4, and the 5. So we just need to see that breach there. That would be a key there. So that's the euro and the US dollar working together. The Australian dollar, we were looking for, off the low here, we were looking for an A and a B and a C. I didn't expect it to move up so quickly and so sharp, but that was just headline driven, so that's that. But what we're looking at here is a five-wave structure for the C wave here. So this A and B and C here can be finished here. So technically, we really need a breach of this top of wave 1 here, this move, this here, so that high there at 81.20. That's what we need to see move down through into 81.20 to breach that, to create overlapping wave structures again, to confirm the bearishness from this wave C coming down here further. But at the same time, we need to be mindful that from this particular low point here, 5 waves down, this could also be counted as wave 1 and back for wave 2, and then another wave 1 or wave 3 moving to the upside, because it has sort of just had sort of overlapped slightly here on top of wave 1, if that's the case, but not enough to be concerned about it. There's only 3 rules in Elliott, and wave 4 here overlapping wave 1 is one of those, but that tends to occur in derivatives or leverage products. So as such, when Elliott put the Elliott Wave together, he did it off the industrials and the transports and those sorts of things. But anyway, let's just drill in here a little bit further. This is what we're looking at yesterday. This is where we were yesterday, and we were looking for a push up, but I just didn't expect it to move so strong. But there you go, a nice strong third wave, and then 5 waves here for the 5th wave of C here. Now, this can be confirmed as a high here if we got 5 waves down through here. So far, we've got an A and a B and a C wave down. So we would have to see this come down through here. And as I mentioned, it needs to take out the top of wave 1 here, which is either this one or this one. I'd say it was this one, but still 88.20. So while it's above this level here, then, well, while it's above the 88 essentially, and splitting hairs at 88.20, then this market is essentially positive. If we see this as, have I got it on a smaller chart here? Yeah, right. So on the 5-minute chart from the top up here, we've got a clear move down and a clear 3-wave corrective here as wave 2 or wave 1 and 2 or A and B. So A and B would be bullish corrective, and that would have wave C come in here, completing here, and this market could just continue to move up through here. Now, if it's a wave 3, then wave 4 would retrace 38.2% of this here, which is kind of in this area through here. But I can see that even this little break here has still got higher to go. So it's looking more bullish than it is bearish. And this wave 1 here, the overlapping wave structure, if this is wave 4 here, wave 4 can't go into the price territory of wave 1 technically, but you know, so if it moves up into here, then it's overlap wave 1 here, and then that would help cement the wave 3, wave C here as an ABC correction and further high ground there. So realistically, you'd be looking to go long off, well, once you're seeing group 2 has developed as support, the 88.72 is critical always, and normally would use that, but you could do it off the 65 as well. You could even go long here and just put the stop under just under here, and that should do the trick as well if it's going to be bullish. So that's what I would do as such if I was going to take that risk. But in taking a risk, don't shovel it all in terms of money management. You just really want to glean some small positions here and look to add on top of, well, 88.72 would be the choice there as well. Yeah, if this 88.50 becomes the retested resistance from here on in, then you're going to be looking at a bearish picture from that point there. So yeah, look, it's all really about the money management, really. So you know, if you forget about picking the direction, and you just think of you know, if you had 10 trades and 8 of them were wrong and 2 of them were right, how would you make money out of that? There's a question for you. What would the percentages need to be? Right, moving on to the Euro Australian. What we were looking here for yesterday, this move up here, you know, first of all, we were looking from this high here. We had the wave 1, wave 2, wave 3, and wave 4, and wave 5, and it fits as a 5-wave structure. So then we're looking for 3 waves up. But the 3 waves we got up here were, you know, they, from my point of view anyway, they looked not corrective, they looked impulsive because they were strong, and they just got that feeling about them being an impulse wave to the upside. Anyway, what we noticed when we got here, we just sort of waited for it, and we've seen on the intraday that we've got 5 waves down through here, so we knew that we would get a corrective move here and we'll get another 5 down. And this 5 down here that we've got has overlapped the top of wave 1 here, and wave 4 can't do that, because if that was 1, 2, 3, 4 here and 5 here, then that would have been an impulse wave to the upside, and then we know that we would have gone further up, but that's not the case. So we've moved down, we've overlapped that structure, that makes that a wave 2 or B wave now, and we should work lower from here. But in working lower from here as well is that we've got 5 waves down here, 3 waves back, and 5 waves down here. So we've also got 3 waves here. So we want to see 5 waves here and then a 3-wave retracement, and then we can short it from that point. Let's drill in and have a bit of a look at that. A little bit complicated here, but as I pointed out the other day, we were looking at 1, 2, 3, 4, 5 here, then an A and a B and a C coming back up, and then over the last sessions we've got 1, 2, 3, 4, 5 here. So all of this down here makes an A, a B, and a C, or it makes down for 1, back for 2, down for 3, back for 4, and down for 5. I'm not sure, because this little move up through here is impulsive as well, and we'll look at that being the A wave up here and a B wave and a C wave up here. So if the 154 became the support, trade long. That's pretty much it from that point there. What have I got on the smaller intraday here? Look, this is just that little move up here. If I just go back 1 second here, that little move up here, I've labeled that wave A as part of a corrective move, but it is in 5 waves going up. So the 1 and 2, the 1, 2, 3, 4, and 5 for the third wave, the fourth wave, and 1, 2, 3, 4, 5 for this one here. So we'd look at this as an A wave, a B wave, and a C wave coming down through here now. Look, I'm just a little bit unsure about this situation, about this market. I don't see a trade here just yet, so we'll just chill out on that one. The pound yen has done everything that we expected it to do in terms of moving to the upside, and the idea was to be adding on the 170, the 171, the 172, and at the 173 here we can add here, but we'll be looking at a little wave 4 coming in through here, so just drilling in through here. Just the intraday stuff here. I think yesterday we were in here, we were looking for a move above the 72 or retested support there, but you moved up strong. But what we got now from this wave 4 here, we've got 1, 2, I think this is the third here, the fourth, and then the fifth will come and give us a little high up through here. Once we got that, then we'll be looking at an A, B, and C across here. And then once we do have 173 as support, then we can naturally look at 175. Yes, 174 is there, and yes, it will have a corrective pattern there, but in terms of the primary corrective patterns on the way up, it's the top of group 1 that we're looking for, and group 1 is always the 3, so 173 we'll be looking for that there. So we can expect corrective patterns to occur across here over the next few sessions, so make yourself a cup of tea. The euro yen, this one here, I'm also a little bit sort of unsure about as well. At the moment, we've got this down as a 1, 2, 3, 4, and 5. That fits nicely. This can be it can be a couple of things really, but I've got it labeled as a B wave and a C wave, so we can have a low in here. But the other side to this too is that this 5 waves down here is fine as an A wave, but this can be a B wave here looking for a C wave here, and an A, basically a move down further, and down for an A and a B and a C, and then moving down through here. So I'm just a little bit unsure about this one as well. So look, I just don't know. If this moves down through here, then at 141, then we've got a bearish scenario, and that could be the case, because you can see from this little point here, we've got 1, 2, 3, 4, 5 here, so an A and a B and a C back up, and then down from here. So, but it would have to move into group 1 here. So group 1 is 10, 20, and 30. So if the market moves in here and gets trapped here, finds them as a retested resistance, then they'll move down from this point here. But I don't have a clear count on this one, so we'll just leave that alone for the moment. Alrighty, well that's it for the FX.